So now that the disclaimer has been said and done, also remember that past performance is not indicative for future results. And once again, I'm not here to give you any form of financial advice, just here just to analyze the markets for educational purposes only. All right, and if you have any questions there, Charles, or if you have any questions, please feel free just to type it in, and I'm more than happy to answer. So lately, the market has been going crazy, as you would know, is because of one of the major news is simply the coronavirus. It's been affecting globally, that affects the world economy. I believe they're all connected, and some of them are not what they seem to be, and it's basically out of whack. And similarly, if we look at the markets based on 2008, 2007, basically starting from October 2007, and through here with the financial crash, same. I believe the volatility has just increased massively, and that's what's basically been happening right at this point in time based on volatility, liquidity. And as time progresses, of course, people now are more getting into the markets, and it's been in the bull market. We are still in bull market, whether we like it or not. In my opinion, I believe something has to be done in order for the markets to correct. It's almost like by design that something has to happen. And if I'm going to show you certain stuff here, actually, it's almost like someone already knew what's bound to happen from there. So if you look at today's March, February, January. So January alone already showed a sign of weakness where you see grapes on doji simply means that there was a lot of buying pressure, and then in the end there was a lot of selling pressure filling the gap. So based on that gapping where it created a new higher high, didn't want to go beyond when actually it did go through, created a new higher high through there, 29,414, and then 24,682, sorry, 29,594, 29,414, 594, about another 100 points to the upside. And then a lot of selling pressure basically occurred. I mean, a lot of selling pressure only happened based on a couple of weeks ago when we're still in February, and it tried to correct itself and then continuation. So currently back in the level of demand right at this point in time, where there's actually a range between 2 points within this low right here, 23,368, and the low of this one, 23,112. So in regards to just 1 second here. So in regards to price points, I believe there is some buyers supporting price within this area. However, as you can see, this one, based on the primary uptrend, there is still some room in order for this to head back down, waiting to retest this low around 21,612. As you can see here, so basically are price points where institutions, or in terms of order that has been filled yet. So there's approximately around this area, around the 20,878. So yeah, the odds and probability would get there somewhere sometime in the future is highly probable. Of course, more massive it drops, there's going to be some form of a correction in regards to stability correction, either created near their lower high somewhere sometime or a new higher high. Other than that though, if I will add in another trend line, right there. Currently, closing price just sitting within the secondary uptrend line. At one point is breaking through, but by the end of the month, if it does break through within this trend, be more accurate as much as I can, but it's actually breaking through at this point in time if I'm just really touching through there. So there's still this distance that it has to cover, approximately another 11% to 12% to the downside, which makes sense, which is now this order fill that these orders that hasn't been filled. Okay, and then some form of rebound. All right, but of course that's more of a longer term. Could read about 4 or 5 bars for the next 3 more months. But if not, depends on what it will do by the end of the month. If it's going to be some form of a doji or some form of any uncertainty from here, then definitely, then there's going to be some form of a correction where the price is going to come back up. So which we're going to look into that as well when time comes. This was a good sign in terms of a higher low. However, because of a massive force to the downside, this simply just a continuation of the force from 2 weeks ago. Uncertainty, they don't know where to go, but if they can go to the upside, if it was a hanging man, or sorry, a hammer, it would have been great. But because it was more of almost like a gravestone doji looking, it's a high wave doji, but the sellers pushed the price to the downside, hence part of the uncertainty. Sellers are still in control right at this point in time where there's more supply than demand. But I believe, in my own opinion, it's way oversold in oversold territories. And see here, we reached the starting point where buyers are really supporting the price. So based on what I can see, we need some form of stability. Well, there's only 2-3 things this will going to occur anyway. Number one, either some form of doji will happen tomorrow. 2, we'll have a piercing pattern that will happen tomorrow that would imagine as a bullish candle that will pierce through halfway of this body right there just to cover basically the losses. And I believe this morning, the stock market basically, they halted trading because of the volatility. That's one thing I don't like trading stocks anymore, is because of that aspect. First similar in 2008. If you're trading futures, you have more chance in terms of liquidity. And hence basically that's why for me is the currencies, because we're a lot of more liquidity basically from there. But nevertheless, hitting on the 24,000 mark, notice 7%. Last night alone, it was already pretty much like 4 to 5%, and the rest of the world when it was trading, like ASX or the Australian Stock Exchange, they were down 6 to 7%. So basically, I had to follow basically through here. All right, so that's based on the Dow. S&P is basically the same, which we're gonna look into it, and right there. Very similar with the Dow. Notice in terms, these are just basically all my notes. Still, we're in an uptrend, whether we like it or not. There's also particular price points, bigger area of demand in regards to fills that hasn't been orders that have been filled as yet. But nevertheless, based on a longer term time frame, I believe these can continue even further. Look at the force right there. There's no slowdown. So that being said, even though you have an upper wick right there, they have to fill that out. No lower high, just a bunch of higher highs and a bunch of higher lows. So from this movement, and if we're going to create a correctional point, so I know Charles and Jerome, you guys been trading now for a while. So perhaps, you guys also agree to what I'm saying here, unless you see things differently that I don't see. And I would also love to hear your input, even if you speak or you basically type it in your chat box. So right at this point in time, look at that 38.50 back to the 62 percentile based on this last impulse of what it created since the beginning or end of 2018, actually, to where we're at. Okay, so it took a year in order for just over the year for the impulse to actually finish. in regards to correction based on similar right here, right? What happened in October 2018. That's also a correctional part. This is just all corrections. I believe whatever's happening with the coronavirus, in terms of fear-based, I believe they put it out of proportion. And it's almost by design that something has to happen, because if it's not war, then something like this will occur in order for prices to correct. Okay, so but nevertheless, notice how it is approaching key levels of demand, where it's pretty much a lot of confluence through there. So the odds and probability some form of stability will happen prior to either a continuation or a minor correction before a bigger move, just to create this wave of correction before it can continue. So still overall, I'm very bullish. I believe there's certain opportunities right at this point in time in regards to buying, and in terms of risk. My style is that even though you have still a lot of forest despite the price and demand, is to test trade, and my plan is simply not to go gung-ho in terms of position sizing. Is simply just to start buying, because price is currently at demand, and there's first level, second level, third, fourth, fifth level. So part of the first level, in terms you can see a lot of confluence, good opportunity of buying right at this point in time. You can see through there. Notice it created a new lower low. So this new lower low, breaking all those primary lows right there within this impulse on the daily time frame, breaking out that low. This low, 27,304, is still higher compared to that 27,496, 27,496. Oh no, not true. Creating a new lower low. Right there, on the other hand, the bigger one right there, 2720. So that's based on the daily. They could easily push and retest, and buyers could create more of a discounted price where sellers will agree in regards to lower compared to these price points. And if so, then definitely a lower high will be expected somewhere sometime. In terms of forecasting, mind you, when something drops massively too based on volatility and liquidity, there's also an opportunity for this to head back up rapidly. So that being said, really never anticipated that it's going to go to the roof. But you see this gap right there, they will fill that gap somewhere sometime in the long run. So based on the monthly, so we already drew this basically uptrend line ages ago, still a bunch of higher lows, and hence is why we're bullish with the VIX, meaning that there's an opportunity for selling the S&P. And when we looked at commitment of traders as well, institutions were already started selling actually. Okay. So because of such a big bull market, it actually took 12 years for price to get back into supply, and also to retest these big gaps right there. Could there be more? In my opinion, there would be. On the other hand, despite being a monthly, we don't know yet what's going to happen, because there's another 3 more weeks of trading days. So if you look on the weekly, same thing. We don't know what's going to happen by the end of the week. This is more of where the areas of unfilled order is going to be. So the odds that it will fill that in is highly probable. Likewise for the daily, still very bullish, but anything can happen. Once again, like I said, depending on what the news, there are no news, no major ones tomorrow. There's not even major news actually today either. So if you look at yesterday, the yen, based on low impact news, yen went nuts. Okay, went to the roof. The dollar basically dropped 400 pips against the yen. And if you notice last week as well, based on non-farm payroll, really good news. Unemployment rate decreased by 0.1. The dollar index just kept dropping as well. So everything is out of whack. I know that when the market's basically tanking, they put it to the dollar, but they didn't want to do that. And I believe the safe haven for what institutions were going for is parking their money with gold. So notice when this one was around at 1580 all the way down to almost 1560, $1,560 an ounce. It went way up right there. So same time, there's also running out of steam. So way overbought. So the odds that it's going to correct itself in terms of probability to create another either higher low or new lower low is highly probable. And the yield is crazy. Look at that. Look at those gaps. From 24 not long ago, 4 months ago, 4 or 5 months ago, all the way down to below 10. I believe that was the lowest it's ever been. Look at that. Even broke out 2008, and this was based on the monthly. This is where, when we're bearish with the yield, this is also when we were bearish with the dollar index. However, the dollar index, there was an anomaly between the dollar index and the yield, because the yield should be in direct proportion with the yield, and while dollar index was going up, yield was dropping. So it didn't make sense. It went up a little bit in terms of correction and basically dropped. So that being said, when there's a lot of divergence, and this what I use in terms of leading indicators rather than using calculated indicators. So I use more in terms of indicators of the macro fundamentals just to see in terms of anomalies or divergence between relationships. So the odds and probability, and hence actually also form a gravestone doji despite a new higher high from this correction standpoint, from a 62 perspective, currently back to the 38.2, heading towards the 38.2 right there. Although long-term dollar index is also very bearish, bullish, long-term bullish, medium-term bearish. However, I believe there's also some opportunities once it stabilizes itself right here. So going back into the dollar index with the relationship with the yield, notice how currently stabilized itself. So the odds that the yield is going to bounce back to fill in those gaps in the next few days highly probable. That being said, this is also going to, the dollar index also going to follow suit pretty shortly. Then a great opportunity for selling the euro. So funny enough, 1560. Been waiting for this for a long time, but I actually got out. And of course, we don't know what's going to happen. Notice in terms of the gap yesterday. So if we left more at positions, it would have been awesome, but it's okay. I'm waiting for a proper timing. It's still very bullish right at this point in time. I know price is currently at level of supply and major resistance point right there, right here. This is the major one at 115.69.8, and currently in an area of supply. Currently touching through there, breaking out through though. Second one is through here, almost. Sorry, let me remove that. So got rejected, went up, came back down. Major one is this. The hive, that one, 15.69.8. So currently there's a big range right there. So what are the odds that they will continue? Highly probable. Hence, even here, though, you have a lower high. So from a short-term perspective, there's also a nice probability um, of selling at this point, buying back when price reaches around 113.50, approximately 100 pips to the downside. Short-term correction, then continuation. So if we put our friend Mr. Fib from there, that's one. I'll just draw here too as form of a confluence. 38.2, 113.42, 113.40. So currently 140.95. That's pretty good profit right there. 40.95, 13.42. 50, 60 pips, 100 pips on the 50th percentile, and then confluence on the 62, 112.48. So from 150 to all the way to 200 pips to the downside. So that's pretty neat. So that's what I'm basically looking for. I'm currently looking at. It's a low risk, high probability. I know there's a lot of the odds in terms of continuation, but it's also too expensive. Shorting would be a much better bet. And when the price comes back down of a correction, means you have a higher probability of buying at a correction. So at this point in time, it's too expensive. So that's my plan. That's what I'm currently looking at. I see that there's a low right there. So from a lower high, higher low, next one would be a lower low somewhere sometime just to fill this gap. Okay, so that's my pick for today. Actually, is the short the euro against the US dollar. Let's look at basically oil, where oil, if you're trading futures, man, oil, we're down approximately around 30 to 40% earlier this morning, actually yesterday. So notice based on their unfilled orders heading back down, better price point of buying. It creates a proper higher low over here, then you have a higher probability of making short quick back to the upside. 4 hours, nothing dictating lower high. There's no higher low or lower low would be more ideal, to be honest. But if you're looking at the monthly time frame, bam, back to 2015, 2016. Notice in terms of that movement, massive. We were more actually when the price were here, we were more bearish than actually bullish, because this was a correction from this impulse, which and then after the breakout, the continuation of the impulse. So the odds and probability that the price can go even further or back within the $20 mark, or even $10. It's actually interesting that gas prices is still pretty much above $3. There's only certain areas at $2.99 if you're paying cash, unless if you go out of the Bay Area, then maybe you'll see cheaper price points in terms of gas, right? But nevertheless, that's crude oil. And then you'll see U.S. oil, Texas oil through there, same. Currently almost at the same levels from 2016. It actually broke out 2009, 2008 area. Back now to this level here, 2004, 2003. What are the odds they could continue to drop over further there? Highly probable, definitely. So a bunch of lower highs, odds and probability to create a new lower low is more than likely to happen. However, back to area demand, so can't really go against it. You have also a good buying price points. But if you're dealing based on speed, definitely can go against the speed. However, a better criteria would be from a stability standpoint, correctional standpoint, around back to $42 a barrel, then you can see him better for selling. All right, so that's with Texas Oil. You can see on the daily, nothing in terms of stability. Continuation of the force. See, this was Friday. It's almost like they knew. They already knew in regards to what the news is going to bound to happen between Saudi Arabia and Russia. So increasing force, much more increasing force, and then, but who would have thought that it's going to really drop 30-40%, right? Nobody did, but institutions did. They already knew from this price point, after breaking out from that major demand, someone was willing to sell oil below 43, 48.6. So that's quite a lot. How many percent? Let's check it. Someone was willing to go through there. 30, 37, $16 basically a barrel in regards of its drop. But if we're going to deal here from final correction, all the way there, 49, make it 50% drop. That's huge. Okay, so $27.15 approximately. Right, so that's oil. Aussie and the Kiwi were also, funny enough, they tanked earlier, which also we're going to look into that. And know for a fact, resources aside from gold for the Australian dollars, also copper plays a big role because of BHP Billiton and Rio Tinto, and hence that's what caused the Aussie to drop all the way down to 60 cents. Sorry, close to 63 cents. Sorry. Okay, so what are the odds that this is going to drop even further? There's also that slight chance back to 2008. Look at that, 60. That's right. It's actually a good time as well to, if you want to travel to Australia, probably now is a good time. Everything's cheap. All right, daily time frame. Let me go back to the weekly for a sec. Last week was bullish, but because of certain news that happened overnight, broke out. Currently, we have a doji cross, almost a hammer, and a better plan for myself here is simply waiting for price to come back down a little bit to create a proper higher low. See, nothing. So as far as I'm concerned, you have a long-legged doji right there too, in terms of almost a gravestone doji. And if price will continue, better price point, 64.94, right, somewhere even here. What I'm looking for is this. Out of the turning point, then I'm going to create a buy. That's a signal right there. Since that already broke out, you see a higher high, only a bunch of lower lows. So that means either new higher low, one, or here before I would turn around. Okay, so that's what currently looking for right there. Based on the far early time frame. So news. Royal Bank of New Zealand today at 5 p.m. Pacific Standard Time, the 4:30 NAB. So there's only the two medium and high impact news right there. Tuesday, there's also really nothing. There's only low impact news with the euro, Aussie, medium impact. Wednesday, you have the pound, CPI, core CPI. So we're just dealing basically for the next 2 days. All volatility will just simply be based on outside news, mainly in what's happening with the coronavirus. Okay? So that's my take on that. I believe there's definitely a lot of opportunities, like I said, with that. And talking about gold and oil. So when oil dropped massively, guess also what happened with the CAD? The CAD tanked. And even though the dollar is so weak, but because of oil, Canadian dollar is simply has been tanking. So what does it also mean once oil starts to come back up? I believe there's going to be some form of opportunity to buy Canadian dollar or to short the US dollar, Canadian dollar right at this point in time. So here are currently we are in a price point where a good supply level is at. There's a big range currently between the high of this, which is 37.934, all the way to 46.98.9, approximately about 1,000 pips to the upside. So plus or minus 100. So 890, 900 pips in terms of a range, provided that it is going to break. So the high of that is 37.934. Oops, high of this one, 37.597, 597.934. So 400 pips difference. It all depends on where price is going to end up by the end of the month. Weekly, on the other hand, same. So it all depends where this is going to be at. But notice the gap. Currently, what happened through their daily time frame. They need to fill this gap. So, number one, I am also bearish short term. I believe there's way overbought and 4 hours waiting for that. Well, there's that lower high right there, filling those gaps, low risk, high probability. That could potentially fill in this gap right there. Approximately about 180 all the way down to demand, 212, within the range of demand, 275. So all this is a free fall. All right, so potential bearish signal right there with the dollar CAD. You need to fill that gap. Also, sellers are now pushing the price to the downside short term. Friday, luckily, wasn't thinking of getting into this actually, despite a very nice right there 1 2 3 bam drop. Didn't want to. Instead, the bulls took over based on news that happened in Saudi Arabia and Russia, and also gold. Well, gold went up and then came back down. All right, so that's with the dollar CAD. Here, the dollar yen, man, also gapped after the news. Approximately, you can see through here, 2100 hours, 3 2 10 o'clock. last night, 10, 11, and then kept dropping. The market opened 5 o'clock, nice gap. Didn't even want to fill that gap. So where to from here, from consolidation point of view, either retest this low or create a higher low, and it's going to come back all the way to fill this gap around 104.91. Right, so that's why with money management, risk management, when you're testing things out, it's imperative to do a test trade because of volatility. Whenever a lot of volatility is happening, once you have less position size, better to calculate how much you're willing to risk. That will calculate the position size based on the last stop. So you won't get basically taken really quickly. Right, so that's a dollar yen. I believe, like I said, there's some opportunities right there for buying, which I'm also currently looking at. And last but not least, let's look at the euro yen. Euro yen tanked. More room to go 130 and 25. Okay. Weekly shows another back to 107 from 117,000 pips. Okay, then a 4-hourly time frame gap in terms of stability, continuation of the fours, continuation, currently stability. Either the price will head back all the way to 118.29, where the current price is 117.15, but 110 pips to the upside. And if it chooses to fill the gap, then you have through there all the way to 118.80. That's approximately 1,060 pips to the upside. It's pretty neat. Oh, that's approximately only about 130, 140 pips. Sorry, not 1,000. My bad. Just about 1%. All right, so that's euro yen. Pound. Let's look at pound. Pound. Notice there's also some opportunity for selling. Right, it's the point in time I am bearish majors against the yen. Currently, nothing dictating though, no lower high. Gonna wait for that lower high to get a proper confirmation for it before it would drop. And monthly, very nice, very bullish. However, there was an evening star right there. Technically, price is gonna get back down here. Still. I'll try to get through there. Okay. So nevertheless, monthly, you have a higher low, so the odds of it heading back up, it's highly probable on the monthly. Weekly, stability from that par is currently in a supply, so short-term correction before it will come back down to correct. Good price points of buying before it can continue. 4 hours, same. Come back around this area before it can continue to go to the upside. So medium, longer term, I'm bullish. Shorter term, based on stability, gotta be short term. Okay. And let's got our friend, dollar Swiss. Dollar Swiss. Same with dollar Swiss, I believe there's some opportunities as well for it buying. Higher low now has been established. Price can go up there to refill that gap. Yeah, approximately 100 pips. Pretty good. So we look at the euro, we look at the pound, dollar Swiss, dollar yen, Aussie, and Kiwi. We looked at the macros. We looked at the S&P. We looked at the Dow. We looked at the VIX. We looked at the dollar index. We looked at the yield, and we looked at the ES and the YMs. All right, just to summarize it all, once again, I believe from what I can see from the markets, I believe there's some form of opportunity. Prices level demand, good price points in regards to institutional price points. There's definitely some form of good buy from there. And what I'm looking for currently is looking for the euro to short when the time comes, to go long with the dollar yen. I believe that's also an opportunity through there because it's been dropping like crazy. And then actually for the rest of the currencies, some are more expensive than others in terms of margin requirements. So Aussie also has a great opportunity, but better for me to wait around the 64.50 mark, somewhere there. Kiwi is the same. All right. Any questions? Questions time, please. Q&A. I know Charles, you're currently on the phone at this point. Hi, Jerome. Hi, Kat. Do you have any questions for me? Nothing? Well, if there's nothing, that's the end for the market update. And I believe there's definitely some room for opportunities for buying. And if you're currently in the markets, good luck. Alrighty. Thank you so much. Well, thanks for listening in, and we'll see you next time.